2.51% on an interest account in today's age sounds very unrealistic, right? But Wealthfront is actually offering this 2.51% not on a savings accounts, but on an alternative that lets you earn this money and also use it as you please. Now, it sounds like a scam, so I'm going to answer that question here in this video. Now, I myself was very skeptical by this 2.51% that Wealthfront is offering, so I did some digging and some research, and you'll be surprised to what I actually found when it came to this entire 2.51%. So in this video, we're going to talk about the pros and the cons, and I'm also going to answer a few questions that you're probably already asking yourself right now. Don't worry, I'm already thinking about it, and I'm going to answer them later on in the video, so make sure you stick around for that. And on top of that, I'm also going to tell you guys how in the world does Wealthfront not only give you 2.51% on savings accounts, but how do they also insure your money up to $1 million compared to like the regular traditional bank that only offers around $250,000 in secured money by the FDIC. I'm going to answer all those questions, so make sure you stick around to the end of this video. Now, if you don't know me, guys, my name is TommyBryson. I'm an accountant, and I've been practicing personal finance for the past 4 years now. And on top of that, I'm probably one of the only channels on YouTube that actually uploads videos about finance and about credit cards, about earning more money every single day. So if you're new to the channel, go ahead and subscribe and turn on notifications to get notified whenever I upload a new video. Now, before we do start the video, I do want to ask you guys one question. So comment down below right now. Let me know if this is the first time you're hearing about a bank account offering 2.51% on your money, or if you know any other account actually offering this that's not a CD, that's cheating. Let me know in the comments down below, because me personally, Chase is still offering 0.15%, okay? That has not changed yet, so let me know if you know any other company, or let me know if this is the first one you ever heard about offering this. So now that you commented, I do want to get straight into the questions and the pros and the cons, but before we do that, I do want to go over some of the simpler details, like for example, what is the Wealthfront money account and how does it work? This is how it works. It's basically an account that lets you transfer out money as many times as you want. So it's not really a savings account, but it does earn you 2.51%, which is one of the highest on the market right now. And on top of that, we all know this, guys, right? The government only lets you have like 6 transactions like per month on a savings account. And if you do more than that, it gets liquefied into a checking account, right? We all know that. But for this one, you can transfer out money as much as you want. Now, this does not mean you have like a debit card to use it and all that stuff. That's not what I mean by that. Now, if you're wondering, Tommy, why do they do this? You know, why do they let you take out money all the time, no problem? And my entire theory is this. It's an incentive to actually have you keep the money inside there, because if you have a big bank, a traditional bank, or an online bank, none of them are going to offer you 2.51%. Unless you're going with Vero, because Vero does offer 2.80% if you do set up the direct deposit with them. But I do believe there's a promotion and it might end very soon, so take advantage while you still can. And I'm very impressed by the Wealthfront cash account, because they basically found a loophole to have you earn a lot of money, have you use a lot of money, and also give you an incentive to keep that money inside of the account so they can make money off your money also while you're making money. So it's a very good loophole, and I kind of appreciate the incentive there. Now, before I tell you guys the pros and the cons and all that fancy stuff, I do want to go over one of my main concerns when it comes to this entire business and this 2.51%. And the main thing is this: it might be a bait and switch. They have you come in after that, maybe a year down the line, they switch it back to like whatever rate it is. But I don't believe that is it, okay? Because these people are very competitive, and I'm going to go over that later on in the video. But here's my thing. Whenever interest rates are going up for savings accounts, that's not really a good sign in the economy, because if people are saving more money, then they're not spending money, then growth goes down, the stock market also goes down. So it's a lot of things you don't really want to think about, but it might be a sign of that. But in reality, what I think this is a company marketing this product to you, have you come in and then market other products to you, like their investment products, their borrowing products, and all that other stuff. Because hey, if you come into the entire business and you like this product, the chances of you actually liking another product are very high. So I think that might be the strategy, but I do think this. I do think they're always going to stay competitive when it comes to savings accounts rate. So it might be a good bargain, but I'm going to break it down later on in the video. So comment down below, guys, and let me know what you think. What do you think about the 2.51%? Is that very high for you? It's not that high for you? For me, it's high because it's like one of the highest rates in the market right now. Let me know in the comments down below, what do you think? And what do you also think about my concerns when it comes to the economy? And what do you think about them doing a bait and switch? Do you think that's possible? Do you not think it's possible? And if you commented, let's get right into the video right now. And I'm going to tell you guys the pros and the cons. But before I do that, I do want to answer some of the questions that you're probably wondering already. So the first thing is this: Tommy, Are you going to call customer service? The answer is no, I'm not going to do that. Why? Because they don't have a customer service number. And the only way you can actually get in contact with someone is by having an investment account. And I don't really appreciate that, because I'd rather talk to a real human, because I sent in an email about 2 hours ago and no one has gotten back to me. And that's a very bad sign to me. I don't like that. I don't like that. I don't like it at all. I'd rather you guys have like a big customer service base, but I do get it also, because you guys might say, hey, Tommy, we're cutting out the customer service base and just having people like answer emails, because that way we get to keep the rates higher. So, you might have gotten me there, but I'm not 100% sure yet. So the first question I'm going to answer is this. Tommy, how do they get the interest rate to 2.51% when the regular banks are offering 0.15% and then 0.10%? How is it so high? And trust me, I get that question and it has a lot of validity to it. And I'm going to answer it right now. And here's how it works. Basically, traditional banks, okay, you'll be surprised by this, by the way. Traditional banks can offer these exact same rates. But my theory is this: they don't offer those rates because they want you to be incentivized to borrow money, because they know that if you're, saving money, they're losing money. But if you're borrowing money, they're making money from you. And they can also charge you 24% off a credit card rather than just having you save money. On top of that, they want to pocket the money from the interest that you actually have in their holding, because some people still save money with these traditional banks that only earn them 0.15%, which makes no sense. Like, if you ask your parents or your grandpa, he's going to say, it doesn't matter, okay? It's just 0.15%. I don't really care about knowing it. But I care a lot about that, okay? And my main thing is this: when it comes to the Wealthfront account, what they say is this: Tommy, we take the money, we get some of the interest also, but we pass on most of the interest to you. So this 2.51%, you're getting that, but we're also still making money. So it's a healthy margin for the both of us. And I like that, because they kind of like working side by side with you. So you make money, but they also make a good margin also. So why not? On top of that, one of the highest in the market. So I'm not complaining. The second question, Tommy, how do they get to $1 million in FDIC insurance? Now, I myself was confused by this, because I've never, ever heard about this. Comment down below if you have before I answer the question. Let me see if you actually have heard about it. But let me answer the question real quick. How do they get it? Okay. It's very simple, okay? Once you start doing the research, it's very simple, and how it works is like this. Imagine if you have over $1 million in the bank, and the best way to do it, what would you do? If you have $1 million, to make sure your money's secure, you'll probably split it around in different banks, right? Maybe like Chase, maybe Wells Fargo, maybe Marcus by Goldman Sachs, maybe Vero. Banks that are secured up to $250,000. So in theory, you have $1 million, but you split it up in 4 places, so now everything is secured, correct? Exactly. So that's exactly what Wealthfront is doing, but they're doing it on your behalf, so that way your money is completely secure. So literally, they have a whole bunch of affiliate banking that they send the money over there, they keep it there, and then they earn interest there, and it's also insured up to $250,000. And then once you reach that limit, they spread it around. So then you always have up to $1 million in insurance. And once you hit that limit, then just go somewhere else and just put that money there. You keep splitting it. And then you always get your money insured by the government. That's how you do it. But imagine you have like $5 million and you have to split it like that. It would be insane, completely insane. So it might get out of hand, but that's a good problem, not a bad problem. Now, the third question you're probably thinking is, Tommy, okay, it sounds great. It sounds good. But can this interest rate in theory go down? And the answer is yes. When it comes to financial products, nothing is 100% secure. That's why I never offer you like one product. I always tell you like, hey, this is one of them. It's the best right now. But just in case it changes, go over here or go over there, because it always changes. So in reality, here's what they have to say. They basically say, Tommy, well, it can change, but the only way it's actually going to change is if the Fed rates actually go down. And basically, if you don't know what that means, the Fed rate is basically the interest that the government charges the banks who actually lend them the money. And right now, it's between 0 to 0.25%. So imagine this. The bank gets the money that they lend to you at 0.25%, and they lend it to you like at 8%, 16%, 24%. That's why they make so much money. That's why they're so profitable. That's why they're so wealthy. So here's my thing. Tommy, what does that have to do with this bank? How does that affect it? Well, it affects it because of this, right? Because if interest rates go down for the Fed, that means that they're actually going to go lend more money rather than just like save more money. So in reality, they'll lower the entire savings account interest rate by that same amount that it went down by. So in reality, you'll just be hit by a couple of points and it'll still stay competitive. But just so you guys do know, if things do change, this interest rate can also change. So my entire recommendation is, hey, keep your eyes open to what's going on, and you don't have to just subscribe to the channel. I'll keep you like up to date, but really it can change at any moment and you never know. But right now, it's a very good rate. And as a bonus question, if you're wondering, Tommy, how do I sign up? How long does it take my money to get there? How long does it take my money to get back? Basically, very simple. All you need is an address, a social security, to be a citizen, a real person. And if you want to send money over there, it takes between 1 to 3 days. And if you want to receive money back, it takes 1 to 3 days. And it also takes around 1 to 2 days to actually process the entire transactions. So then that's that. Very simple. So comment down below and let me know if I answered some questions you actually wanted to know. Let me know in the comments down below if you have any other questions. And right now, I actually want to get straight into the pros and the cons. And here's where I actually start diving into detail. So the first pro I actually want to go over is that it is a cash account, meaning that it's not a real savings account, meaning that you can actually take out money as many times as you actually want through the entire month. Now, I don't recommend this because it's kind of like it defeats the purpose, because if you're trying to save money, why would you be taking out money all the time? So that entire thing of like, hey, it's a cash account, you take money. It's like kind of like a little gimmicky, because in reality, if you know what you're doing, you're not gonna try to actually take out money from your savings account. You're trying to save money, But if you just want to, if you're not secure, if you just want to take out money all the time, then that option is there, just in case you actually do want to do it, which I don't recommend. The second pro is this: it's one of the highest rates on the market, and you don't need to actually lock in your money whatsoever. So you don't need a CD to earn this 2.51% for 1 year. And if you touch your money, you just lose all the interest. You don't need any of that stuff. And a CD is a certificate of deposit, meaning that your money is locked into the bank. You can't touch it. If you do touch it, you get penalties. Well, with this, you don't need to do that. You basically have the money and you have no type of attachment to it. You can take it out whenever you want to do, and it's one of the highest rates in the market right now. So that's pretty good. Now, the third pro is this: up to $1 million in FDIC insurance. Now, I already broke this down how it works, right? But I also want to break it down from a business perspective. In reality, I think the reason they're actually doing this is to promote a healthy long-term relationship with you. And this is why I think the rates might not always go as down as you think, but it will fluctuate, but not as much. Because if they're offering $1 million in insurance, they're probably trying to like hint that, hey, we're trying to make sure you're saving up your money here for a very long period of time. And we're going to make sure everything's safe. So if you go beyond $250,000, don't worry, just keep the money there. We're going to keep insuring it, so your money is always safe. So that's a pretty good sign to me, because it shows longevity, and longevity is very important as long as you guys do have the best rates on the market. Number 4, no fees attached to this account. Now, this is a big deal for me, because the last thing I want to do is earn interest to then find out you guys have a hidden fee or some hidden agenda out there that you're taking my money out of my pocket and you're really giving me 25 times more than what the average savings account gives me, but in reality, you're still taking my money away by giving me fees. But this account has no fees whatsoever, and you'll be surprised that the minimum to this account is only $1. So in reality, you can open this account and fund it today just with $1. You don't need $500. You don't need $10,000. You don't even need $20,000, $75,000. And I say these numbers because Chase gives you a higher rate if you have a lot more money, and then the higher rate doesn't even compare to this 2.51%. So huge disappointment, but we're talking about this account, and we're obviously not talking about Chase because Chase kind of sucks. So let's just stay away from that altogether. Now, the fifth pro is this, and I'm going to kind of put them all together. And the first thing is this, okay? It has a lot of articles when it comes to education. So the app actually tries to educate you on everything before you actually take that step. And it also is very good at transparency. It always tells you like, hey, we charge this for the investment account. We charge this. Your money, if you don't pay us back, we can actually take it from your investment account. Like, they put a lot of details into being very transparent. On top of that, they have a very good app, and I've never really seen this before. Actually, I have. I've done a lot of these videos, so I have seen this before. But they have a lot of good reviews on their app store. So people actually like the app. It's very interactive, and that shows me that they have a very good agenda when it comes to making sure that everything is interactive and everything works perfectly. Because you might see a bank that offers great rates, but when you go to the app, it's like, what is this, like 2006? So I like that the app is updated and that it actually works very fine. People like it. Now, you're probably wondering, Tommy, those are the pros, so what are the cons? Nothing's perfect. What is it? Hit me with it and just like crush my dreams real quick. And I'm not going to crush your dreams, trust me. The cons are not such a big deal. And the first kind I want to talk about, Tommy, there's no debit card. That kind of sucks for me. I want a debit card with my savings accounts just in case. Well, the answer is no. There's no debit card. And for me, that's not a big deal because, again, I'm not trying to save money to then spend my money. I'm trying to have my money earning money, not having me sabotage myself with a debit card and just using my savings. Doesn't make any sense. For me, that's not a big con, but it might be for you. So just in case, Here's a con. The second con is that the rate is going to fluctuate depending on the Fed rates. And this will happen eventually because the economy is constantly fluctuating. It's not like a fixed thing forever. It doesn't work like that. And if you're wondering, Tommy, what does the Fed lower the rates? Well, this is a whole different video. I'm going to give you the gist of it right now. And it's basically because, if the rates are lower, then banks can lend more money at a lower rate, meaning people can borrow more money, and then the economy can actually grow because people are going to be spending more money. That's the entire thesis when it comes to that entire thing. And on top of that, if you go vice versa and then they actually higher the rate, then banks can't lend that money out at a very low rate. So in reality, people won't be borrowing money, they'll be saving more money. Thus, the economy will start not really growing that much. So that's the entire theory behind it. Now, the third con for me is that there is no customer service whatsoever. Now, I imagine that if it's a savings accounts, they're not going to really have a lot of people actually calling in and be like, hey, how's my money doing? I'm having a problem here. No, it's very simple customer service, okay? So I believe that if you just hire a few agents, maybe 100 people, you're not going to get a lot of calls. And on top of that, you can actually have those people just manage everything else, also be a part of that team, but also answer calls for the savings accounts because they're very simple questions to answer. Hey, how much do I earn? Any fees, requirements? That's about it. That's all people are going to ask. I know they can find it on the website, but some people just want to call. So I actually like and appreciate being able to call and talk to a real human being because you guys have still not gotten back to my email, which I'm not happy about. Now, the fourth con is actually some people might not be okay with this, and it's that your money is actually spread around different banks and different affiliates. So in reality, if you have over $250,000, maybe even less than that, they might spread your money in different banks and stuff like that to earn you more interest, yes, but also to get that FDIC insurance up to $1 million. So you might say, Tommy, I don't want my money all over the place. I just want it in one place. In reality, I don't care where my money is. As long as it's insured and it's secured and it's safe, you can do whatever you can't do whatever you want with it, because I don't want to be supporting something that I don't want to support. But as long as my money is safe and you're not actually doing it to hurt anybody, then I'm good to go. That's really all I care about. So let me know in the comments down below, guys. What do you think about the Wealthfront account? Do you like it? Do you not like it? What do you think about the pros and the cons? Which pro do you like? Which con do you not like? Let me know in the comments down below before I tell you my final thoughts on the company and what I think about the entire thing and if I actually recommend it or if I don't recommend it. So now that you commented, here are my final thoughts. And you might be surprised by this, but it's kind of advice and also I'm concerned about the entire thing. And here's why. The first thing is this, guys. The company is highly competitive, and here's why I say the company is competitive, because they also offer, for example, high savings accounts rates, 2.51%. That's very high, one of the highest in the market. On top of that, they have low management fees for investments. I know the video is not about investing, but they do have one of the lowest rates, which is 0.25%. They're competing against Acorn and a whole bunch of apps out there. On top of that, they have low APR when it comes to lending money, between 4% to 5%. And that's very low, and you can also borrow against your portfolio. They're very competitive. You're wondering, Tommy, why are you telling me this? Why does this matter? It doesn't matter, Tommy. Just a savings account. That's all you should be talking about. In reality, I'm concerned because when a company is highly competitive, either two things can happen. The company can be competitive, get a lot of customers, and always make everybody happy, or they can be forced out of business if another business is actually better and has more money, actually steps in the game and actually puts them out of business. For example, imagine this. What happens if Chase decides tomorrow, hey, we're going to offer 4-5% on the savings accounts. And we're also going to give you investments for free. No transaction fees, no management fees, no anything. What do you think would happen to these businesses if Chase decided to do that and they would do it for maybe 2 years? What do you think would happen? Answer the question. Comment down below. My theory is that this business wouldn't really have a lot of customers because everyone would go over to JP Morgan because they're offering 4 and 5% on the savings accounts. And you might say, Tommy, this doesn't really happen. But if you look at Amazon, for example, when it comes to a lot of the categories that they do offer, Amazon owns a lot of websites, okay? And I read a book, which is the Jeff Bezos book, and their entire strategy is that when they find a company, they compete with the prices and they actually keep losing money for that entire year or 2 years just to put that other business out of money and then buy them at a lower cost. So this might happen, and then that's my main worry, my main concern when it comes to the business. But if you guys are smart and you know what you're doing, you won't be caught up in those competitive games, because if you're losing money, then it might not be the best case or the best scenario for you and the business in the future. So just keep that in mind. So guys, you're probably wondering at this point, Tommy, do you recommend it? Do you not recommend it? And before I tell you that, let me know in the comments down below, what do you think about the entire competitive stuff? Because I'm very concerned. Let me know if you're concerned about the entire thing. But do I recommend it? And the answer is, I recommend it as long as it stays this high. If it stays at 2.51% and it's the highest one in the market right now, go over there, take advantage of it, because I do believe it's going to change, and it's going to change with the market. But while it's going on, and my prediction is this, I give it 24 months. In 24 months, that's 2 years, by the way, it's either going to go down or it's either going to go up. And you might say, Tommy, it sounds like that's going to happen. You know, it's either going to go down or up. But here's my thing. Either two things are happening right now. Either they're just doing this for marketing, or the economy is actually switching around and actually switching gears. What this means is that if interest rates are going up, then growth is going to slow down, and then the market is actually going to start going down also. So my entire theory is this. They're either going to go down or they're going to go up. If they go up, that's not a good sign. So just be careful. As always, guys, thank you for watching the video. If you liked it, go ahead and like the video. Every time you guys like the videos, it actually helps out the channel a ton. And we've been growing a ton because you guys have been liking the videos. So I really appreciate that, because guess what? The like button is free, and it also pays 3% interest. So make sure you subscribe while you're at it. And while you subscribe, hit the notification bell so you get notified every single time I upload a video. And if you want to talk to me one-to-one or uno, just DM me on Instagram at TommyBryson. I answer all my DMs, always very fast. So any question you have, just DM me over there. And any ideas for future videos, just comment down below, because I upload every day. So I'm constantly running out of ideas. So I always need more and more ideas. I'll see you guys next time on this video. Thanks for watching, and peace.
You've got to start